Okay, traders, what's going on? Jamie Saettele here with the Intro to EidoSearch webinar. I've got David Kedmey with me. He is one of the co-founders of EidoSearch, and I'll be going through, kind of how I use the software, and maybe give you some tips, some pointers, on how I find it most beneficial, and how I work with it efficiently. But what I want to do is I want to just pass it over to David real quick and kind of let him, say a few things, can maybe give you a history or, talk a little bit about IDO came to be, and then we'll go through, some examples. But first, let me pass it over to David Kedmey. So, David, are you there?
Hey, Jamie, I'm here. Can you hear me?
Okay.
Jamie, you able to hear me, Jamie?
Tell them that you can. Hold on one second.
Jamie, can you hear me?
Yes, I can hear you. Great.
Oh, okay, great. Yeah, hey, everybody, and thanks a lot, Jamie. Are you able to see my screen?
Yep, I can see it. Yep.
Okay. I appreciate everybody joining and taking the time to learn a little bit more about EidoSearch. So I will just start with a little bit of background so you know the context of where our technology comes from. So what we do at EidoSearch is predictive analytics, and we take a unique approach that comes from outside of finance, which is search by example. And the basic idea is, given a pattern that's exhibiting itself today, we don't have to predefine it. We can use the example and search for like patterns throughout a database very rapidly. And the whole point is, if you can find conditions that are similar to now, you can use those to study what might happen next. And this is tech that my business partner, Dr. Xiaoping Zhang, developed over 20 years. He's had an expertise in search and applied that to a number of fields: neurosciences, NASA looking at satellite imagery, and a number of other areas where you're talking about big data that's difficult to model and describe, but where this technique has a lot of efficacy. And so we went through many years of R&D and built the engine, the search engine, patented the technology, and a couple of years ago really brought that to market with the all asset classes in the financial market in mind. So to date, we've sold our product to institutions anywhere from the global macro theorists to systematics, stat arb hedge funds, and across equities, futures, currencies, indices, the various asset classes. So the whole idea, and Jamie will make it concrete by way of example, is search for reoccurring patterns over time, use those to forecast the distribution, and then get the probabilities that the data can give us, and apply those to the trade decisions that we make. So, Jamie, that's a little bit about the background. I can pass it back to you.
Yep, sure thing. Okay, so we should be back on my screen, right? Everyone can see this. Okay, super. Okay, so if you've watched the video, the platform walkthrough, kind of goes through, the basics here. So, when you click on login, I've already got the page up, but it brings up this page. You'll be brought to the Insights page first. Not really going to go through all the details here, because once we go through the watch list or an example there, you'll already understand, you'll be able to understand what's up with the watch list, okay? So David touched on it, but it's what I think is so great about EidoSearch, the fact that you can scan for market opportunities in literally in seconds. So in FX, what's or as any trader for that matter, unless you're trading options or something and selling premium, really the biggest thing that you want is movement, right? Is price changes, and this makes finding that pretty simple. So when we have the length here for pattern searching, presets 1 day, 5 day, 1 month, 3 months, 6 months, 1 year. For me, the sweet spot as far as swings concerned is 1 month. So I have it set to 1 month. It's always preset 1 month when I go to it, and just viewing the top three and bottom three. The most positive, you go across one. We're not going to trade Danish, FX here, but Swiss yen, CAD Swiss. Okay, so it's looking like Swiss yen is positive and CAD Swiss is positive. Okay, that's fine. Bottom three, Euro CAD, dollar Swiss, Euro yen. Those start to get interesting. We can see that, the number of matches, when you see a really big number and a really big skew between percent downside and percent upside, that's when I think your interest, or at least when my interest is really peaked. So here we have Euro yen for the next month. It's indicating, and we talked about this in the platform walkthrough video. I like to call these things, these percent upside and percent downside as windows into directional opportunity. Okay, it does not mean that on average that it's going to be down 6%, okay, with all the matched patterns. It does not mean on average it's going to be up 1.3% with all the matched patterns. We'll kind of go into that here in a second, but let's look into this Euro Yen example a little more, because it's actually a pretty interesting one right now, okay, as we look at it. All right, so here we have Euro Yen. We're searching, 1 month. The query is 3 months, meaning that there are 3 months of data being searched. So this is going through and searching for patterns that look similar or have a pattern match with the last 3 months, okay? And then spitting out what happens over the next month, all right? We can scroll down, you can see the upside and downside, okay, and then the average, all right? And this is kind of an average path. Now here's where you're going to make your difference as a trader, and this is true for whether it's FX, stocks, or futures, or whatever. Okay, you want big possibilities. Okay, and in this instance, we're seeing that there is certainly the possibility. Okay, and based on Eido's technology, a possibility within something reasonable, right? It's not like this is very far fetched. That a month from now, Euro Yen is going to be lower. Okay, so just this quick scan reveals that for us. We can see upside potential is not nearly what it is on the downside. Okay, and if you think about real quick, those of you that might be watching this on a as an archive might not understand what I'm about to say, but those of us that are the current SB guys, you will understand. We were recently looking at longs on Euro Yen, right? And we were long. And, we had to stop, and we broke down through a really important level. Okay, so when I see something like this in conjunction with the analysis that was done beforehand on Euro Yen, it probably is even more important. Okay, because now we have all that analysis that we did suggesting upside. Well, you know what? It didn't work. And we've now got this, and it's okay to switch. In fact, I don't call that flip-flopping. I call it kind of surviving and being a trader. Okay, so this is where we're looking, as far as Euro Yen's concerned now. Big downside potential. We broke some big technical levels, and this is super interesting to look at, in my opinion, in the current environment. Very, very valid. So we go down to some of the statistics. We have matches. Now, something that is concerning from this pattern is that there's only 13 matches. Okay, now the matches that you see, in other words, what this 13 number means is that throughout the history of Euro Yen, the software, basically found 13 matches above a certain threshold. Okay, you can have
thing that was happening with CV.
Test.
Hold on.
No, it started to work now.
All right.
Okay, am I back? Okay, the mic cut out. So I'm not sure exactly where I got cut out, but anyway, we'll just continue on. Okay, so Euro Yen, 13 matches, okay, and you can have a 100% match. That's not going to happen. A 100% match would be what you're looking at right now. So if you compare the exact same pattern with the exact same pattern, it's 100%. The closest match in this instance is actually this one. It has a pattern similarity score of 0.868. So the 13 number means that there's 13 pattern matches with similarity scores above 0.7. Okay, so basically you're looking at the 13 very similar patterns. I mean, you could make the threshold below. You can make it whatever you want. This is preset to 0.7. EidoSearch has done tons of statistical analysis and studies on this, in order to verify or validate, what the best numbers are, and that goes for look back periods as well as the pattern similarity scores. So you just know that there are 13 patterns like this in the history of Euro Yen that took 3 months in time, and over the next month, this is what happened. Okay, you have again, we kind of went through percent downside and upside, windows into directional opportunity. You got the ratio here, so 0.2 times. Basically, that's if you take 1 over that, you're going to get 5. So on the downside, it's a reward to risk ratio of basically 5 to 1. Okay, that's a pretty good one, right? For a trade idea, and this is not the only thing that goes into finding the trade. This is really kind of the maybe the beginning steps if you start by looking at Eido first, and then you got to look into, this is not going to tell you the price to trade at, where to put your stop. Okay, this is giving you over the next month. There's this big potential here, this big possibility that Euro Yen could trade a lot lower. So we have good reward to risk here, but only 13 matches, something to take into account. Now, this is probably my favorite part as far as getting into the analysis is concerned. And I will get into questions a little bit towards the end, as I see there are a few popping up. Be sure to keep them coming, or you can wait towards the end, but I definitely want to address those. So as we get into the charts, okay, as mentioned, you've got the pattern similarity score. So this is the most similar pattern to Euro Yen, okay? And this happens to be in 2011. You can see in 2 different ways. You can have the overlay option, okay, in which it's overlaying what the current pattern is of the last 3 months. That'd be your query pattern, your search query, and then the matched result, okay? And if you want specific dates, which is often quite useful, say you want to go to a chart and kind of do a little more analysis on this, which I completely suggest doing, but you can go to table view and you can get the exact dates. Okay, so you can see the current one, score 100, that's just the current pattern, and that's price action for Euro Yen from August 17th until November 17th. Okay, which is yesterday's close. These are done on closing prices. And then if you were to look at the next closest match, you can see that would be June 28th to September 28th, 2011. All right. So if you wanted to go to whatever charting package it is that you use, you can go there and you could draw the overlay over it or whatever, or even put the data in Excel. But this is a great way to start kind of a deeper analysis, if you will. So that you can see that match there and what happened. You got the green or the red indicates what happened the next month for Euro Yen. Okay. And in this instance, the ones that match closest actually ended up being positive to neutral, I'd call them. And the ones that are maybe not as closely matched, matches of 0.796, 0.795, 0.790, ended up being the really negative ones. Okay, so it's a good starting point for a deeper analysis. If we want to go a little bit into, say, looking for just upside or downside, and this is actually a question that was just asked, so I will kind of answer it now. This is from Mark. Can you search on positive, percent positive, and count, look for the best one? Sure thing. So if you go to watch list, okay, you can click on the column header here and end up getting, basically, say you want to find the most matches, okay? Euro Kiwi has 30 matches. All right. Now the average return's relatively flat. Percent upside against percent downside is really not all that different. Okay, so there might not be, you know, a huge directional opportunity here. Again, that can be useful information in itself, though. Okay, so what we're told here, just really quickly, just looking at these numbers, is that Euro Kiwi is, you know, in a state that it's been in a lot. Okay, because there's a lot of matches. You know, so maybe it's in a fairly predictable pattern, but it's in a fairly sideways pattern. Well, you could use that to range trade, right? To fade rallies and to fade weakness. Okay. I'm not going to go to the charts on this right now, but after this webinar, you can bet that I'm going to go to the charts because I'm pretty interested to see what Euro Kiwi looks like, you know, as far as, you know, our other methods or our other tools are concerned, whether it's horizontal support resistance levels or whether it's slope levels or Fibonacci or what have you, right? If we're trading between pretty well-defined areas, then you can bet that there's probably some, you know, some opportunities there to trade. You know, and Euro Kiwi, obviously, as we know, can move, you know, pretty quickly on a short-term time frame. You can look at a weekly or daily chart and it looks like it's gone nowhere, but, you know, there's, you know, swings of several percent between very well-defined levels on Euro Kiwi. So, you know, the fact that there's no huge directional opportunity here, and let's be honest, that's kind of the case most of the time, right? People fall in love with, you know, the big directional macro move after August 24th, okay? But that's the time when the markets tend to get a little quiet. Okay. All right, my mic just cut out, but I'm back. So I hope you caught all that on Euro Kiwi. So most matches there. We can, you know, again, toggle that. Maybe we just want to know percent upsides, okay? And this is 2 days. Percent upsides, Swiss yen looks particularly bullish based on this. Again, just 10 matches, okay? Percent downside, Euro yen is going to be the first one. We already looked at that one, for example. Next one, you have pound Kiwi. Euro CAD is an interesting one here. You know, Euro CAD, and I just, not without even looking at the chart, but I know Euro CAD is down, you know, towards important lows and getting into some interesting, you know, potentially, you know, support levels, if you will. But we're looking at this Euro CAD chart or from Eido, and you can see that we've had some pretty big declines based on the search query, based on the matched results. Okay, so, you know, it's the best thing about Eido is, you know, one, it's completely objective. Two, it just is a very efficient way to search for opportunities and understand, you know, the states that markets are in. We go to a 5-day chart or 5-day query here, and you can see there'll be a lot more results, right? Because the shorter time frame you're looking, the more likely you are to get results. It's just kind of the way that, you know, life works. I mean, you're not making as specific a search query, right? You're not looking out 3 months. Okay, so there's going to be more pattern 5-day matches than there are 3-month matches or 1-month matches, or you can go out further than that. I personally don't go out further than a month. Okay, if you're using this for stocks or something, then, you know, go out much further for longer holding periods. But for currencies, it usually doesn't make sense to go out further than 1 month, to be quite honest. Okay, so that's what I'm kind of looking at there. Just for, you know, interest's sake here, let's look at what we've got on the 5 days. So we're showing pretty positive average returns. Looks like Kiwi. As far as the things that we'd probably want to trade, I don't think we're going to be trading Euro, Mexican peso necessarily. Percent upsides, Kiwi yen, Kiwi dollar. That's pretty interesting considering where we are in some of those crosses, of course. You know, SB, you know, we're looking at some longs right now and related stuff like Aussie yen, actually. downside. Dollar Rand actually, which has actually come off now 3 or 4 days from record highs, so that's pretty interesting. Again, these are 5-day searches, so this is really short-term stuff here. Okay. All right, now I want to get into exploring. Okay. So let's think here. Let's go back. Let's look. Why don't we just look at euro, right? Because we're at a big juncture, supposedly, possibly. We don't know for sure. Let's look at. We'll look at custom. We'll look at a 5-year chart of euro. Okay. Well, let's look at the last year. So this you can search basically. Say there's a custom setting that you want to look at. Okay. And what I mean by that is there's a certain, subset of data or, a certain pattern length. It might not be based on time. It might just be based on, the pattern itself. So in this case, I'm talking about the euro and how it's traded from the March low to now. All right. And I just typed up here euro EUR/USD. And what we're going to do here is I'm just going to hold the mouse. I'm going to highlight it. All right. And this is what we're looking for. I'm going to find matches. Let's see if there's any matches. Now, this is a pretty, long period. Also, I'm going to want a little further out. I'm going to 20-day projection. So you can type here what you want as far as, to give you spit out what kind of stats it's going to spit out. This is important because if you're searching this and you specifying that you want 5-day projections, they're going to look a lot different than if you want 20 days out. All right, so find matches. Okay, so not enough matches. So that pattern itself does not, have a ton of reliability, or it's just not a pattern that shows up a whole lot. Okay, as far as the history for euro dollar is concerned. So let's try something else. Why don't we look at, let's see what else would be interesting to take a peek at right now. Could look at Aussie dollar, been coiling up. Kiwi dollar is actually an interesting one, I think. We'll look at a year of data and zoom in. All right. So we can go from maybe this point forward. Why am I looking at this? Well, that's really kind of when you started having what could be either a potential base or simply sideways pattern until this thing goes a lot lower. So that's why I'm in on that one. All right, so this one actually does have a couple matches. There's only 2 of them, but you can see that it shows 4% upside and 4.4% downside. So this, by understanding this pattern that I just searched, going back from July 19th to now, so basically the last 4 months of price action, 4 months exactly, we're looking at the fact that Kiwi dollar actually has a pretty good range over the next month. Okay, 4% moves in either direction. It's a huge move, and we're gonna, let's just see what the matches look like and when they occurred. So here's one. You can see the table for this is actually January 17th to May 18th, 2011. The other one is 2014. Okay, January to also May. So it's interesting, they both are the exact same time, just different years. And here's the overlay. And here's what they look like. So this tells me, novice might look at this and say, well, it's not a whole lot that you're going to get out of this. One went way up, one went way down. That's not true. We're at a huge level in Kiwi dollar, and this actually kind of confirms what I'm thinking in the first place when I look at Kiwi dollar right now, just on a chart, is that there's potential for a lot of move. Okay, Eido tells me that is true, and I'm not just seeing things. So that's comforting to know. It also tells me that, look for breakouts. Okay, we're trading at a big spot on Kiwi dollar. We have the September high. It was from the last Fed meeting on the 17th, or 2 Fed meetings ago on September 17th. September 18th high was up there at 64.55, I believe, something like that. We're at 64.40 right now. So if Kiwi is going to continue lower and potentially head a lot lower into the end of the year, we break this level, it's worth attempting a short Kiwi with, a tighter stop, or looking at the hourly chart, looking to get in on a short-term slope. Okay, the same token, we start to break higher through short-term resistance, then that's something to look at, on the long side. So, there's a whole lot of wealth of information here, or a wealth of information with EidoSearch, and, using it, in, I think, innovative ways in analysis and understanding. It's not going to, spit out, go long here, go short here, okay, but it is going to give you, context. It is going to, give you kind of potential for market moves, or if a market's more likely to stay in a big range, as we saw earlier with Euro Kiwi, or is a market likely to, experience a more dramatic decline or advance? Is there directional opportunity there? And that's what we're seeing right now with Kiwi dollar and Euro yen before that. Okay. All right. So what I want to do is, let's see, there's a question here. I think David Kedmey can answer this one, but it says, yes, the session will be archived. It said, you said the data is based on closed prices. Is that GMT 0? I assumed it was based on 6:30 a.m. pricing, since that is when we get it. So David, could you possibly answer that question?
Jamie, let me check on that, and I can send an answer for you to distribute to the group.
Yeah, because that's going to be based on the data feeds or the data provider. So we'll answer that, for you, but. I wouldn't be surprised if it's just based on the end of New York close prices, since that's kind of a standard.
Yeah, I'm almost certain that's the case, but I want to verify from our data vendor, and but that should be the case.
Okay. All right, so we will get that confirmed for you and everyone else. I know I didn't spend a whole lot of time here on the Insights page, but, just you can kind of play around with it. It's pretty self-explanatory. Going into each, each market, or major indicators as they're called here. I mean, S&P, 10-year Treasury, crude, and gold, okay, gives you, just a very quick snapshot of, kind of major macro implications over the next month or 5 days or whatever it is you're looking at. This is really interesting for gold. And David, I've got to hand it to you. If you guys on this Insights page, if you scroll down, you'll see research that is actually in-house at EidoSearch. Okay, so there's a few interesting ideas here that pop up. I mean, they're all interesting, but every once in a while it gets really interesting. Back in mid-October, when gold was ripping higher, and they actually published a piece down here that had gold is something along the lines of gold's about to go lower or whatever, and it was basically calling an analog that they had searched and had found X amount of times in history. It had done this. I don't know how many times it was. It might have been 4 or 5 or 6 times. And it said at the end of it, or 1 month later, gold was down every single time. And here we are actually 1 month and like 2 days later. And well, gold's not just lower, it is absolutely plummeted. So that was a super interesting article. And, the fact that you guys had the cojones to put that out, I thought was pretty awesome. But you're just going on the probabilities and everything, right? And going on what the research says, and or what your algorithms say, and that's the biggest thing, is you got to trust it. So yeah. So you guys should check this stuff out, though.
Yeah, and that's right, Jamie. It's a big part of this is you have to start with the probabilities. And in trading, in investing, it's easy for the emotions to take hold. Even when we're making our calls and we're reporting on the numbers, given similar conditions, what tends to happen next? It's mechanical in a sense. We have to occasionally fight our own emotions just to put out the research when you buck the trend. But that's really what opens up the potential to profit in markets, is to have a well-supported view that occasionally is different than the consensus. You're more likely to do that in an objective fashion if you start with the data, and that's really the purpose of this technology.
Yeah, absolutely. And it's if you are in this, this trading world long enough, and you kind of get the sense or get a feeling at certain times that markets are this is a little overdone, or this is about to break out or whatever. But acting on it is a totally different thing, and it's very difficult to do so because it's very hard to trust that. But when you do have something like this, backing you up that says, oh, wait, that's not just a feeling, that actually is the case because that's happened before. It's a pretty powerful thing, and it makes a huge difference. So, yeah, biggest thing, trusting the data, which at the end of the day is, that's what technical analysis is. So this is very pure, and it's in what it is. It's pure technical analysis. So here's a question from Craig. How do you analyze the touch points and similarities on an example match? So I'm not exactly sure what you're saying. I'm going to click on something here. Let's click on gold, for example. Okay. We'll go down here to, so I'm assuming you're talking about the charts and the table. So here's like an overlay. Let's see. So this is the overlay of, so you're talking about, I'm assuming this is the similarities. Touch similarities is an example in a match. So these are matches. I'm not exactly sure what you're talking about as far as what your question is. How do you analyze the touch points and similarities as an example in a match? Looking at charts, thinking about Euro Kiwi range. Okay, so I think you're talking about maybe taking it to the next level and moving to a chart. I mean, I guess we could try to do that. It'd be like a hybrid, right, of me going to the next level and looking at, okay, so, we'll do that as we move on throughout the days, weeks, months, et cetera ahead. For purposes of just this webinar, which, we're going to put out to everyone, just to kind of show a little bit more about the software. I'm not going to go into that here. So I don't want to turn it into, say, an analysis webinar, so to speak. So we'll just kind of stop it, here for now. But yeah, definitely understand that. Brian's asking, I'm still a little unclear on the upside and downside. Can you revisit? Sure. So this will be more useful, I think, with and David kind of listened to me, so tell me that I'm not totally screwing things up.
You got it.
All right. So what I want to do with this one is I want to go to one that has a little more matches because it makes it easier to kind of graphically show it, visually show it. So let's go we'll go to 1 month, and we'll go to that Euro Kiwi one. So it has 30 matches. Okay, so here's the histogram of all the similarities that, again, show a similarity score for the match of at least 0.7 or better. All right. The percent upside and percent downside is basically, from what I understand, showing it, at least the best way to explain it visually is here's the positive results. More or less 70% of the way through the positive results is going to be the percent upside. And 70% of the way through the downside results is going to be the percent downside.
Yeah, Jamie, that's right. What we do is we start at the average that we consider the center of gravity, sort of the midpoint. And then, just as you said, we count 70% of the way up, and we count 70% of the way down. And the whole purpose is to say, here's the likely range. You have a 70% chance of falling between the upside and the downside. Right. If that's a really wide range, there's information. If it's narrow and very skewed, it's another great piece of information.
Yeah.
And so it's counting around that center of gravity, the average, to capture the bulk of the moves. Of course, it's helpful to look at the extremes too.
Yeah, so there you go. That's the way to look at it visually. But just that one sentence, there's a 70% chance that X market, okay, whatever symbol it is going to be between upside and downside targets. within, that time period, that time length. So if we're talking about Euro Kiwi, you're giving it 70% chance it's going to be between up 2.2% and down 1.7%. Okay, that's, again, that's, fairly, range-like behavior over the course of a month, but, decent range nonetheless. That's, when you look at something that has a big skew, as we said, Euro Yen, 70% chance it's down 6.6% or up one, between those levels over the course of the next month. You can kind of look forward and understand that, well, next month behavior in Euro Yen is one of, breakdown. The next month behavior in Euro Kiwi is one of range, right? Okay, so I hope that helps to answer the question. So Mark has an interesting question. If you choose a particular scenario and you check this day by day, then the probability should go up every day if the trade goes in your favor, right? Well, keep in mind, it's taking in new data. So just as a trader takes in new data, that changes the forward, that changes the pattern, you're also dropping off a day from, what you had, before. So if you search 3 months, let's say 3 months ago to now, August, 18th, 17th to November 17th. Well, each day you go forward is changing, not just because you're adding a new day, but you're also subtracting the day before. So yeah, if you run this tomorrow, it'll be different than today, but probably not dramatically so. But once you start getting past, say, August 24th, and you start seeing, the market events of that time were significant, you're going to see the things, the probabilities, and the what's suggested next, based on history, is going to change a little more because you're dropping off big points in market history, basically. Okay. So I hope that kind of makes sense. We can obviously talk about all this as we go forward in SB. Okay, so I think that we've gone. Is the 70% based on a positive correlation to the previous pattern compared? The 70% is not based on it's not, Brian's asking, is the 70% based on a positive correlation? No, it's based on the history of the matches. It's based on the matches, okay, and the history of matches, and then giving, a probability of the current situation 1 month forward or whatever it is that your length is, based on all the similar instances, okay, of similar patterns and what happened afterwards. So it's not based on there's no correlation, I should put it that way. It's not like it skew. I think what you're asking, it doesn't skew it like more towards if there's a match of 90% or something, or I should say 0.9. Okay, it doesn't like give that a higher weighting necessarily. Okay, yeah, so that's what he's asking. All right, so Craig, how is it determining matches, critical highs and lows in time period? Well, I mean, there's a ton of it goes into it. If you were in the beginning, David was talking about, I mean, this has been applied to neuro sciences, and it's a very complicated algorithmic process. So it's not matching highs, lows, and all that stuff. And now we're getting into questions about shorter time frames in the works. I know David is working on some things. They're always working on stuff as far as improving, and expanding, their reach with data. But as of right now, like what we're looking at here, there's nothing as far as, minutes or seconds. Okie doke. All right, so I think we have kind of run the gamut here. And I'm going to wrap it up. I don't know, David, if you've got anything else to add.
Yeah, I think that's a great introduction, Jamie. It's really for me, it's wonderful to see the numbers, the statistics translated into actions, and that's where I see so much value in the way that we're working together.
Yeah.
It's when given the probabilities, given what we know from the data, how do you act on it? And that only a trader and someone with the experience, somebody in the markets and watching, can really make those connections. And so we're happy to be providing these numbers and these statistics and answer the questions regarding methodology. And I really do see power in the way that we work together. So thanks for the opportunity to discuss with your members.
Oh, no problem. Thank you. And going forward, we're going to be integrating, EidoSearch and this much more, with SB and kind of. A question earlier about more integrating that Euro Kiwi example and taking it to the charts, right? And again, so that is where the value is, is being more efficient in your analysis and being able to put out, well thought out ideas, but with the power of this data. So we are super excited over here. All right, so I know that we'll probably have a bunch of questions more going forward, and we'll do our best to answer them in the coming days and weeks. But for now, I think we're just going to end it there. And I want to thank David Kedmey for joining us today. Again, co-founder of EidoSearch. And David, thanks for doing this, man. And we'll talk to you later.
Thanks. Looking forward to it. Thanks, everybody.
All right. Okay, all right, so I'm wrapping it up here. Again, of course, this will be archived. We'll have it up here as soon as possible. And everyone have a great rest of your day. All right, take care. Bye.